Hello everyone. Welcome again to my weekly market outlook. Me again, SK. This week for August week 1, we are going to take a look at how market has been moving, what can we expect in this coming week, August week 1, and what are the news that we can expect that may move the market for August week 1. All right. So again, welcome to my weekly market outlook, and we just got almost coming to an end to the earnings season. Most of the technology stocks actually reported last week, especially like Facebook, Google, and such, with most of these technology companies actually reporting better than expected earnings, especially like Amazon and Facebook. Facebook continues to skyrocket with their earnings, with them beating their estimates every single quarter. So now, before we move on, before we look at the charts, let's just get started with what actually took place last week, which was July week 5. All right, end of July. And if you could look at this over here right now, S&P 500 barely moved. It only moved negative 0.07%. It did in terms of intraday, it did actually achieve an all-time high, but when it closed on Friday, the overall results was the S&P 500 closed minus 0.07%. all right, so that's the S&P 500 index. So if you're going to take a look at the what took place for all these sectors, so it is pretty obvious, because due to the drop in the oil price, a huge drop whereby the crude oil actually closed around $41.60. So that's the reason you're looking at energy stocks over here being beaten down by 1.38%, and as well as utilities and as well as consumer staples. So now over here, why S&P 500 is still holding on to his position, why there is no retracement, is because of the good earnings by technology sectors. Technology stocks basically reported good earnings, from Microsoft to Facebook to Google to Amazon and such. So thus you could see over here, for over last week, for July week 5, technology sector was the leading sector overall. It actually gained in total 1.35%. So for July week 5, S&P 500, the main driver was technology stock. So that's the reason we have S&P 500 index still holding on over there flat. Later on, I will show what took place in Dow Jones index as well, because there is some divergence between S&P 500 and Dow Jones right now. So this is just a pretty summary of what took place for July week 5. Let's just go back to our usual chart, which is our SPX chart, and let's see how the whole movement is actually reflected in our chart, and is there any weakness, strength, and what could we go or could we see in coming weeks. So now this is again our weekly chart for SPX. all right, just let me just get this correct. And yeah, so over here we are looking at SPX chart. So if you could see over here, we had a huge up move after the Brexit week, and then we had continuously weeks after weeks with a positive close and as well as record high close. And now finally we are at this situation right now, or we could say this particular candle right now. So as you could see, the previous week, July week 5, was the recorded another historical high in terms of intraday, thus the level of 2177.09. so that's the highest level right now, and this is how we are looking at SPX chart. So let's just get started in terms of our trend, in terms of support, in terms of resistance, etc. So as of July week 5, our trend is back into uptrend, as what we can clearly see based on all the historical high close that been taking place for the last 3-4 weeks. Trend is pretty clear. We have our uptrend. So now let's just take a look at the support and resistance. So when it comes to support and resistance, let's just say this is our support right now. Why is that our support? It's pretty easy. That was our previous high before the market skyrocketed in last few weeks. Let me just change that to blue color, because that signifies support. But remember, this support that we are actually marking over here, which is around 2127 to 2130, anywhere over around there, it is not a tested support yet. All right, so this is pretty much we expecting previous resistance to turn support, but whether will it hold, will it actually work as a support or not, we wouldn't know until the market actually retraces back to this level. Then we probably can see if this 2130 actually hold. So that is what SPX support could be right now. And anything further than that, any level below that in terms of support, we may be looking at around, so that is around 2040 to 2050. Okay, so that is another level that we could look at, but for now I highly doubt we will be actually reaching this level anytime soon because of the bullishness in the market, because of the market movements. 2130 is the most possible support that the market may retrace back to. Okay, now in terms of resistance, obviously it's pretty obvious that we do not have any real resistance here right now because we are at a historical high, so sky is the limit. But in terms of the other trade technical tools, like which actually tries to approximate or estimate where will be the next, where the resistance will be. So if we are using Fibonacci, if we are using our pivot points, then we could find few other resistance. So I'm not going to go into the details of it, but using a Fibonacci, we are probably looking at around 2180 to 2200 as the next resistance level. So if I were to mark it over here, so 2200, yep, so that's pretty much where the next resistance could be. So it, again, as I mentioned, it could be anywhere between 2180 to 2200. So that is our resistance. So we have established our support, we have established our resistance, and in terms of the technical indicators, you can see that the 20 weeks moving average has crossed back, and that is our support, which confluence together with our usual horizontal support. We are looking at a possible retracement. Okay, I will go into further details about it shortly, but just before that, let's just go to the daily chart, because there is something important that I would like to emphasize over here. Because over here, using weekly chart, these are our resistance and our support. But when you go into the daily chart, there is some extra elements that we need to watch out. Let me just get rid of the, so once I've zoomed it, then we could see something clear over here. Now what I'm trying to show over here is pretty simple. So if you were to see over here, market pretty much has been moving nowhere. It is actually stuck around this level, which is this, around 2160, and around here, which is around 2176 to 2177. So in terms of daily chart, this is our support right now. All right, so let me just zoom in over again. So this is our support, so I'm going to change this to blue color. All right, so just keep it over there, it's blue, and yeah, fine. All right, so this is where the market is moving. So if you could see over here, after the market has crossed above 2159 to 2160, each time the market drops to this level 2160, the buyers comes in again and it pushes market back up. So you could see this taking place again and again and again. All right, so this is 1 2 3 4 5 and also 6. This is almost like 6 candles, and it has been moving sideways for pretty much the whole of last week and as well as July week 4. So we don't have any real trend or movement in the SPX right now in terms of daily chart. So for the market to move higher, it needs to break the 2176. All right, the market needs to close higher than 2176 to 2177, and for any real retracement to take place, any real sell-off to take place, it has to move beyond 2160. So it's pretty much attracting a lot of buyers over here at 2160, and as well as a lot of sellers at 2177. So it's pretty much a 50-50 fight between the bear and the bull. So that is what daily chart is trying to show us, and you have seen how weekly chart the supports and resistance, and now we have narrowed it down to on our daily chart in SPX. So this narrow gap is what need to be broken right now in SPX. So now let's go back to our weekly chart. So we have all our lines established over here. So now let's just take a look on what could we expect for this coming week, which is August week 1. What will be my market outlook for this week? If we were to look at SPX weekly chart, and if you to zoom into this particular, all right, just excuse me on that because I'm going to refocus to over here. And yep, so if you were to focus right now, this particular candle that we are looking at, this is what we could be calling as a hanging man. What does a hanging man means and where does it occur means differently. All right, so when it occurs at a peak after a huge bull run, that shows the weakness in the rally. That means the market is tired and it is time for it to come down. But this is not 100% signal that shows that, oh, market is going to come down the next week itself. So July week 5, it has shown some weaknesses. So we have to watch out for this week. Is there any continued weaknesses, or it is just a temporary weakness for last week before the market continues its uptrend? So this week could be crucial to look out, because if the weaknesses continues, then we could probably see a retracement coming in the month of August. So for now, this is a weakness. So this is a hanging man. So if you want to see it again, you can also see it over here. This has taken place previously as well. This is a classic example of another hanging man. Yes, this is another example of a hanging man. They will call it as doji as well, but in terms of the pattern where it has a longer lower wick, so this is a typical hanging man as well. So this hanging man shows weakness, shows indecision in the market, and it shows and weaknesses starts to build into the market rally. So in terms of this, and as well as if you were looking at the MACD, it continues to show bearish divergence still. All right, I've been highlighting this week after week. We are still looking at bearish divergence in terms of MACD, and we are also looking at bearish divergence for the Chaikin money flow. So these are the few indicators. There are some of the warnings that I've been looking at the market. So based on this, my market outlook for this week is going to be a sideways market yet again for the week. All right, so as I said, it's going to be moving sideways again. We could see another flat week for August week 1. Why am I saying so? Because first, the bullishness in the market is still high. But at the same time, there's already weaknesses in the rally based on hanging man candlestick and with all the other warnings. And as well, the market has pretty much taken a huge rally. It is high time for it to retrace back. When or how much will it retrace, we wouldn't know right now. All right, we need to wait and see in where does it actually retrace to. So I'm calling for the market to stay flat for now because of the bullishness in the market, which brings in more bulls. But at the same time, a lot of fund managers, traders are waiting for retracement before pumping in more money. So this is where I'm saying a 50-50 fight between the bull and the bear. So I'm just going to go ahead and say this is going to be another sideways week. And also we need to highlight one big thing over here, because this is the first week of August. So we have the non-farm payroll numbers coming in on Friday. So that is another big event that we have to focus on. Market may just be flat until the numbers are announced on coming Friday. So again, let's just keep it simple. We wait until jobs reports are out. Until then, I'm going to expect the market to just move sideways. There are also another reason why I'm calling for the market to move sideways, because as much as it's high time for retracement to take place, there are a lot of stimulus plans that are being planned by various governments in a few countries like Japan, in England, and such. All right, so those news will be coming out this week, especially for Japan. They are trying to print more money. There are a lot of news about helicopter money, a lot of news about stimulus stuffs. So we have to wait and see what those news bring in. All right, so thus such news may bring in some up move in the market, but I still see sellers coming in for every single up move in the market. All right, so for any real retracement to take place, as I highlighted before, it has to break the daily support, which is around 2160, and for any uptrend to resume, it has to break the 2176 or 2177 level. All right, so it's a sideways market. So let's just focus on what are the elements that we need to pay attention to. What are the news As I've already mentioned, the first biggest news that we have to focus on is actually the non-farm payroll. So if we are looking at the non-farm payroll, as I mentioned, we are looking at the consensus forecast of a jobs growth of 175,000 following an increase of 287,000 in June. All right. So the unemployment rate is forecast to hold steady at 4.9%, while average hourly earnings are expected to rise 0.2% after gaining 0.1% a month earlier. This average hourly earnings does matter a lot because, as it expected, if it keeps rising, then it's high time for the Fed to actually increase the interest rate as well. So hourly earnings, the earnings estimations is also very, very important. And we also have another news, which is Bank of England, a rate decision in terms of its interest rate, and it will also be releasing its monetary policy committee meeting, and they will also address the financial press at 7:30 a.m. Eastern time. All right. So the poll of economists actually published, they are actually estimating or predicting that the British will actually cut its benchmark interest rate to 0.25% from 0.50%. So that's something that we need to wait and see coming Thursday. And we also have the China manufacturing PMIs, and we also have US ISM PMI surveys. ISM means Institute of Supply Management. So that's all the news that we need to watch out. But as obvious as always, whenever it's the first week of the month, non-farm payroll is the number for us to focus on. So that is pretty much about what SPX is. Now, as we have done with SPX, I would like to highlight certain intermarket analysis, because this kind of analysis will help us to predict or to know where SPX is heading next. So if we are looking at this right now, where I have highlighted about gold price, so I highlighted that this yellow box is where the support for gold is, and I'm looking for a retracement to the level here, which is roughly around 125. So what actually took place last week is a typical example of a clear retracement to the resistance turn support, and now it took a huge bounce. So if you could see right now, the market went down all the way to 125, which was our previous resistance, now turn support, and we have a huge bounce over here. So such move in gold, which has been a healthy move, this is mainly driven by the drop in US dollar. So this bounce here is a healthy bounce, and for the main reason which is driving this bounce is actually the US dollar. So after the Fed news over last week, the US dollar took a huge hit. So that's what we could actually see over here. So if I were to just zoom in over here slightly, so you could see that this is in US dollar, which has fallen through all its previous support. So if we were to look at the US dollar and the gold price right now, this drop in US dollar is actually quite a bullish signal for the gold. So I will pretty much go long for gold, but I will still stay cautious, because the overall outlook, going forward, the Fed most probably going to increase their interest rate by probably end of this year. So because increasing interest rate will never be a bullish signal for the gold. So over here for US dollars, we are looking at it. I just drew a Fibonacci over here as well. So we could probably be looking at a retracement up to the 50% level, all right, which is roughly around 95.28. But I strongly do think that the next level could be roughly around 94.75 as well, which is the 61.8% retracement level, Fibonacci retracement level. So if we took at the classic supports, so we are looking at roughly around here. So yeah, roughly around this level will be the level to watch out. 50% level of Fibonacci confluences along with our usual horizontal support. So that, and as well as 61.8% could also be turn out to be another support level, which is roughly around 94.72. So with this level going on, we need to watch out on how it actually affects gold. But for now, gold looks like a perfect bullish signal. And just before we go on further, I also would like to highlight about what has happened between the SPX and the Dow Jones average. So over here, what we could see is SPX is pretty much has been moving flat. there's no pretty much any movement, and for last week they only went down 0.07%. There's almost no movement at all. But over here in Dow Jones, we have started to see some weaknesses. So if you could see over here, as of last week, the Dow Jones has actually turned lower, and this is what we are seeing right now. It almost looked like a peak over here for Dow Jones, and a lower turn has started to take place. So we could see a retracement level for Dow Jones all the way to probably this level, all right, so which is its previous historical high, which is now could turn out to be a resistance turn support. So that's roughly around 18268.67. all right, so that's the level to watch out for Dow Jones. And why I wanted to show this is because when Dow Jones has started moving, S&P 500 will follow suit as well. It's just a matter of time, so we need to watch out. And that is another reason why I'm saying SPX right now showing some weaknesses as per the candle down, hanging man candlestick over here. So we could see a further down move in SPX because Dow Jones has started moving, and technology stocks are actually hitting all-time high right now. So that is what holding SPX. But again, we are done with earnings season, so we could see a lot of fund managers taking in profit. And remember, apart from taking in profit, the another part about month of August is it is one of the weakest month for S&P 500 or the stock market overall. So we could see a lot of downward biased movement for month of August. But still, for this week, I'm still calling for a sideways market movement. We may see some up move, we may see some down move, but we could also see huge move because of NFP. But end of the day, the net movement, I'm still looking at a flat move for SPX for the week of August, week 1. Alright, so that's about it, guys. That is what I have for y'all this week. That is what I'm looking at for. Do like my Facebook page if you want to continue receiving all kind of alerts and all kind of opportunities in the stock market. You can just click the link over here to like my page. And till then, till we meet again, stay informed, stay invested. Hope you have a profitable week for August week 1, and see y'all again next week. Signing off, SK. Thank you very much.